Hello everybody and a very Merry Christmas. This is Lara with your end of the week video for US oil for the trading week ending Thursday 24th of December 2020. I have three short-term pictures for US oil. The first one expects the trend to remain the same until proven otherwise. The upwards trend may continue to the next short-term target at 51.87, where a pullback or consolidation to last about 2 weeks or so may begin. The longer-term target for that is at 121.43. I do have two other wave counts though. We'll get to those when we get to the daily chart level. At the monthly chart level, oil is this wave count. My analysis sees oil in a new bull market to be sustained over many years, if not decades. This is a huge new bull market for oil if this wave count is correct. From this high to this low, it is not possible to see this structure as a 5-wave motive structure, which means in Elliott Wave terms it really will only fit as a counter trend movement or a corrective structure. This structure is a double zigzag and it has an absolutely perfect fit. A, B, C, the first structure in the double is labelled cycle wave W. The double is joined by a 3 in the opposite direction labelled cycle X. A, B, C, the second zigzag in the double is labelled cycle wave Y. If this is an Elliott wave corrective structure, it's a counter trend movement, which means the larger picture for oil beyond the monthly chart level should be a huge bull market, with a first wave complete here, a second wave complete here, and now a third wave beginning. If that 1, 2, 3 is correct, then 3 needs to move beyond the end of 1, and it needs to move far enough beyond the end of 1 to allow 4 room to unfold and remain above wave 1 price territory. So that means 3 needs to move substantially beyond the end of 1. I don't have a target for it because I can't be confident of exactly where 1 began, so I can't be confident of the length, and I cannot apply a Fibonacci ratio between 1 and 3 to calculate that target for you. When within supercycle 3, all of cycle 1, 2, 3 and 4 are complete, then I can apply the Fibonacci ratios between cycle waves 1, 3 and 5 to calculate the final target for you, but that will be some years away. Within cycle wave, supercycle 3 may only subdivide as a 5-wave impulse. 1, 2, 3, 4, 5. While all of my charts now are going to label cycle 1 and 2 over here, I will have to keep pointing out that it's possible I may need to move the degree of labeling here down 1 degree. Early in a new movement, getting the degree of labeling right is one of the most difficult portions of Elliott waves, so you have to be open and flexible to changing your degree of labeling if price action necessitates it. For now, let's consider cycle 1 and 2 over here. The first daily chart from this high, the weekly chart from this low here, this point down here, see cycle 1 over here, cycle 2, and now cycle 3 in its early stages possibly. I also have an alternate which considers cycle 2 not over, and it could continue lower as an expanded flat. It may not move beyond the start of cycle 1. Let's look at the first daily chart, which will follow exactly this labeling here, where cycle 1 here is this point here, cycle 2, A, B, C, a zigzag subdividing, 5, 3, 5, and cycle 3 beginning. Within cycle 3, it's possible that primary wave 1 has one more high, or a little series of highs, possibly up to the target. If the target is wrong, it might be a little bit too high. But this is the most common Fibonacci ratio between intermediate waves 5 and 1. I've relabeled the structure within intermediate wave 3. I'm considering this and this little correction here to be counterpart second waves to the fourth waves here and here, and if we do that, then only intermediate 3 may have been over at the last high for oil, and this downward movement of this week may be intermediate wave 4. That means the channel should be redrawn from 2 to 4. A copy not on 3, I'm going to push it up to contain most of this movement, so it's a best fit channel, not perfectly an Elliott channel, but the lower edge is drawn as Elliott would draw a second using the second technique around an impulse. This lower edge is now much more conservative, and so if it's breached again, then I would discard this wave count. If we see a new low below this price point here, I will discard this wave count in favour of the second wave count. While price remains above this low, assume the upward trend remains, assume this is a pullback with an ongoing upward trend. There's some support from classic analysis for that view. I'll explain why when we get to the daily chart for oil. The target expects intermediate 5 to reach equality in length with 1. That's the most common Fibonacci ratio for a fifth wave. And when primary wave 1 is over, then primary wave 2 would still be expected to be a multi-week pullback and possibly quite deep in relation to primary 1. It may not move beyond the start of primary 1. The target for cycle 3 remains the same, for it to reach 2.618, the length of cycle 1. Alternatively, seeing these a little bit differently, if we don't see this as a counterpart to this, and now we can see some primary wave 1 over here. So let's just go back to that first chart. 1, 2, 3, 4, with 3, 1, 2, 3, 4, 5. The second chart, 1, 2, 3, 4, 5 complete, with 3, 1, 2, 3, 4, 5 over here. It depends on what degree of labelling you give these little pullbacks here, this one here and this one here, and so we need to consider both possibilities. The second wave count has a little support from classic technical analysis as well. I will discard the first in favour of the second if price makes a new low below this price point. If that happens, then expect it's very likely that a multi-week pullback is underway to end close to the 0.618 Fibonacci ratio at 39.45 as a preferred target. Price will not move in a straight line. There will be bounces along the way. One of them, a big bounce, a sharp bounce, or a sideways consolidation for intermediate wave B. Primary 2 may not move beyond the start of primary 1 below 33.65. The final target for cycle 3 is the same. Alternatively, it's all the same from this high here, labelled cycle wave 1. And now what if cycle wave 2 is not over? What if it's continuing as an expanded flat correction? A, B, C. There's not a lot of support from classic analysis for this wave count. This has low probability, but low probability does not mean no probability. Just because it's got a low probability doesn't mean we shouldn't be aware of the possibility. And when low probability outcome occurs, it'll never be what you expected as most likely, because that's the nature of probability. And so if both of my first two wave counts are invalidated with a new low below this price point, then this is the wave count I would use. I would consider cycle 2 as an expanded flat correction, subdividing A, B, C, to end close to the 0.618 Fibonacci ratio of cycle wave 1. Cycle wave 2 may not move beyond the start of cycle wave 1 below 10.24. At the weekly chart level, price is now in a strong cluster of resistance above, with support about 43. Upward movement had some support from volume, but now for the last fully complete upward week it doesn't, and now the very final week, which is closed red, it has even less support from volume, but this is a short week, so we shouldn't read much into that. ADX is increasing, but it's still just below 15. It's still not indicating an upward trend. If it did reach 15, this would be a very strong bullish signal though. Hasn't given it that yet though. ATR is flat as price moves sideways, and it's been declining as price moves higher. Seems to be a normal behaviour for this particular market. On balance, volume broke above weak resistance. That was a weak bullish signal. No signal since. RSI is in neutral territory, room for price to rise or fall, stochastics overbought. Looking at the daily chart level, let's see how extreme conditions reached at that last high. ADX was extreme, but not very extreme, and RSI was overbought, but only with one peak. It's for these, considering these two indicators and how oil normally behaves prior to a big correction or consolidation, that my main wave count is still expecting some more upward movement. What normally happens for oil is ADX will reach very extreme above 45 and above both directional lines, and RSI will reach into overbought, and then we may see a failure swing or a little bit of movement into overbought to exhibit bearish divergence between peaks in RSI and swing highs in price. If we see that set up, then I would have more confidence in a more sustained downward correction or big sideways consolidation to relieve extreme conditions for oil. We don't have that set up yet, and so I would expect this, well, it's rather an obvious upward trend, to most likely continue. However, we have a bearish candlestick pattern here, and it has strong support from volume. Coming with conditions extreme, ADX extreme and RSI extreme, that may be telling us that a bigger consolidation is here earlier than expected, and so that's my second wave count. Counteracting that, though, is this bullish long lower wick on the same candlestick as the bearish engulfing candlestick pattern, giving us conflicting information. And so, again, I have those two wave counts to consider both possibilities, and this is the price point I'm going to use quite close by to differentiate between the two. On balance, volume doesn't give us a signal at the weekly or daily chart level. We've been over RSI, stochastics in neutral territory, MACD bearish. That's all from me this week with your oil analysis. I hope that all of our members are well and healthy and looking forward to a fabulous Christmas with your families.